It's the beginning of a new business week. Welcome to Business Incorporated, live from Lagos, Nigeria. Coming up on the show, Nigeria's Manufacturing Purchasing Managers Index for March improves from 50 reading in February to 52.8 in March. South Africa's new finance minister outlines his priority areas towards growing the economy. Plus, Tanzania plans to import 400 megawatts of electricity from Ethiopia to power its industrial drive. And let's get started now with the latest data coming from FBNQuest, which shows that Nigeria's Manufacturing Purchasing Managers Index for March improves from 50 reading in February to 52.8 in March. According to FBNQuest, the appreciation of the naira at the parallel market through the CBN interventions is responsible for the recovery. The index report, which is based on output, employment, new orders, supplies, delivery times and stock purchases, revealed that 4 of the 4 sub-indices ended in the positive territory. Employment was the only sub-indices in the negative, moving within a range of 42 to 52 since January. And to the markets, and here in Africa, all the markets we track here on the program were in the green at intraday. South African market has moved ahead after the removal of the Finance Minister, Pravin Gordhan. The market was trading higher this first trading day by 0.62%. Nigeria was up 0.03%. Egypt outperformed, up at 0.89%. Meanwhile, Nairobi stock market closed up 0.06% on Friday. In the Middle East, United Arab Emirates climbed ahead in an otherwise quiet region at intraday. Abu Dhabi and Dubai markets were trading up by 0.38% and 1.37%. Now, Qatar's index was down 0.52%, with the number of declining shares outnumbering the number of advancing ones 9-7. Now, Islamic lender Masraf Al Rayan was the main laggard, dropping 3.9%. Saudi index was down 0.13%. And markets in Europe, of course, were higher this morning as investors eyed trade and economic policies in the U.S. and looked ahead to new economic data. Markets are also gearing up for the first round of the 2017 French presidential elections, set to be held on the 23rd of April 2017. And let's cross over to Frankfurt. My colleague at the market there, Annette Wisbart, is standing by to talk to us. Good afternoon, Annette. Thank you. Annette, thank you for joining us. It's good to have you back on the program. Now, it's the first trading day of a new week, a new month, and a new quarter. What's buzzing around the market right now?
It's actually a very positive market here in Germany and also across Europe. I think the DAX, at least the German benchmark index, is flirting with record highs here currently. And this is as the euro is also a little bit lower than last week, which is, of course, a positive for the export-driven companies here in Germany. But overall, I think the mood is rather benign, because what also happens right now or currently is that there's a big shift from investors going out of U.S. equities, going into European equities, because there's a growing sense that Europe is undervalued versus the United States.
Now, the first round of the French presidential election is scheduled for the 23rd of this month. How much impact will this election have on the European markets?
I think the first round will actually not be that dramatic for the markets yet, but I think everybody is concentrating on May 7th, when we'll see the second round. In the event that Marine Le Pen might win the elections, that will be a very negative scenario for the markets, a very negative scenario for Europe. Many people are suggesting that if that might happen, then Europe is again in a very adverse scenario, also potentially with the risk of the euro falling apart. That might be a bit extreme as a view, but still Marine Le Pen has promised to lead France out of the euro. What is clear is that then the very traditional German-French axe, so to say, the motor of Europe will not work anymore, and that is a huge political risk out there. But the markets for now seem to ignore it.
Now, quite a number of economic data coming out from Europe there. One of them is the Eurozone final March manufacturing PMI, which has just been released. What does the number show about the health of the region's big industrial economies?
Yeah, I only have positive news here today. The PMIs also came in at the highest reading since, I have to have a look, since 2011. So it's a almost 6-year high when it comes to the economic activity in the manufacturing sector. And there's one downside to it, that the PMI Institute, they are saying that now what the economy or businesses are facing are delays in the supply chain, and that is one of the major risks here. So in essence, it seems that the economy is kind of growing close to its full capacity, and it's almost overheating according to the PMI. But as I said, the downside is supply chains disruption and also rising costs. But rising costs are also a net positive for the ECB, as they are looking into inflation to pick up in the Eurozone. And if the manufacturing sector is saying that prices are on the rise, that also means that inflation will eventually go up in Europe, and that means that the ECB can end its ultra-loose monetary policy experiment rather sooner than later.
Well, Annette, I love it when positive news comes in. So you be positive and enjoy the rest of the day. Right, thank you very much, Annette. We move on now to the U.S. The stock index futures pointed to a marginally higher open today as markets around the world start the second quarter on a positive note. Stocks closed lower on Friday with the Dow falling around 65 points. However, the three indices finished the first quarter higher, rising by at least 4.6%. The Nasdaq enjoyed its best quarter since 2013, rising more than 12%. On the data front, Monday will see the release of the latest ISM manufacturing index reading at 10 a.m. Eastern Time. The index rose to 57.7 in February and is expected to inch lower to 57.3 in March. Construction spending and vehicle sales data will also be released.